What's up, YouTube? Welcome to the Credit Plug channel where we talk about how to build credit, how to establish relationships with banks and financial institutions, and most importantly, how to get you access to high limit credit funding. If that's something you like to listen to, we welcome you to subscribe. Otherwise, you can support our channel if you just like, share, or even comment right down below. It helps our content get out to a wider audience, and we greatly appreciate the support. Before I get into today's video, I just wanted to thank all of the subscribers who helped us get over that 10,000 subscriber milestone. It's definitely a great accomplishment. I've been putting in a lot of work to put these videos together, gather these data points, and share it with the community. So I definitely hope a lot of you guys are getting value from the information that we put out, and we will continue to put out information, as we grow as a channel. And I know a lot of the growth has actually happened over the last 30 days. We kind of went from 5K subs to now over 10K subs. So over half of the people who recently subscribed, actually it's the majority now. But with that being said, I wanted to just put out or just highlight a couple important things, especially as our channel grows. I feel it's my responsibility to highlight some very important information as people go about their journey in terms of building credit and their entire financial journey as well. So number one is doing your own research and due diligence, right? So, if you see information or video from 6 months ago, don't necessarily take that at face value, right? Because a lot of things can change within that time period, right? So the information in that video may not be relevant to what's actually going on today. So it's very, very important, that you do your own due diligence. And when you are looking at a video, just, look to see when it was posted, right? To kind of gauge, okay, how recent is this information? Because it's very important, especially when you're going about building credit and especially getting access to funding. You want to be working off the most up-to-date information as possible. That makes a world of a difference, especially when different institutions are switching up their banking policy, right? We've seen a lot of that over the past 3 to 6 months. So things are definitely changing up, and I wanted to also touch on the whole point about positioning, right? I get emails about people applying, getting denied, or even just oh, I got a 750 credit score. I watched your video, I applied, I got denied, right? So one of the most important things when you're going about getting funding is positioning. And I'm gonna go over a couple things that you probably want to make sure that you do before. And actually, this is what I've utilized, my entire credit journey, right? Because when I started out, I didn't have good credit, so I couldn't rely on my credit score only. So what I did was the whole relationship banking strategy, right? And I know that's not the popular thing, because a lot of people just want to get straight to their credit, get straight to the money, get straight to the funding, and kind of want to skip over that step. But I'm going to just say going forward, that's going to be one of the most important things. And the reason why is because right now a lot of institutions are doing maximum exposure limits for new customers. I did a video the other day on no credit check loans that you can get through different credit unions, and the theme across all of them is that in order to qualify for these benefits, you have to be a member for at least 90 days. Another subscriber actually shared with Navy Federal that now they've implemented a maximum exposure limit for new customers. So customers who have been members for less than 90 days, the most they're going to give you on a credit card is going to be $3,000. And I've actually seen that with a couple clients who, under normal circumstances, we would have expected them to get 25,000. So just things like that, right? So when it comes to positioning and relationship banking, the reason why it's going to be more important now than ever is because getting by just on your credit score is not enough, right? Or your credit profile, right? Just because you have a high credit score or a good credit profile does not mean each and every bank is just going to roll out the red carpet for you and approve you for everything you apply for. That's just not how it is. When you are building through relationship banking, what you're doing is you're expanding your relationships with that institution. So you're becoming more invested in each other. And the way you do that is, you might have a checking account, you might have a savings account, you might have, a money market or an IRA or even like life insurance. So it's just expanding the number of accounts within the institution, right? And that's also building up some internal data points with that particular institution. So, when you see me like, doing these different unboxing and approvals, it's not just that I'm, joining these institutions and then immediately applying for credit. Not to say that I've never done that, but for the most part, it's planting the seed months in advance. So if there's an institution that you eventually want to, get a certain credit card from, or a line of credit or a loan, going forward, the best thing that's going to work out in your benefit is establishing that relationship very early on, and then once you've built up enough, data points, right? So, and that could be, like I said, having all these different types of accounts, checking, savings, IRA, different types of accounts, even maybe even some merchant services, and then and then also too having like a little bit of money in the institution itself, right? Having some money already, because that's going to lower your risk. Have some activity going in and out of those accounts, right? Because banking relationship is two ways, right? It goes both ways. You benefit from, the services and being able to borrow money. The institutions benefit because they make, money off interest, fees, and also taking your money and leveraging it, 10x, right? Because of the whole, fractional reserve banking laws. But that's a whole nother video. Um, but yeah, that's what you're going to want to do. Build up these relationships, position yourself. And then another really, really important thing too. I did a video several months ago on credit gardening, right? So credit gardening is basically where you refrain from applications or new accounts over a certain period of time. Usually it's going to be a minimum of 4 months, and ideally like 6 months if you have a thinner profile, right? So when you're gardening, the whole reason why you want to garden is because any account that's less than 3 months is considered a new account. So if you have new accounts, regardless if you could have an 800 credit score, right? You could have an 840, 50 credit score, right? And still get denied if you have recent accounts. So let's say, for example, like it's July right now. Let's say you got two or three new accounts back in May, and then tomorrow you want to go apply for more credit. Well, that's going to trip you up because when the banks see that, right, the institution you're applying to, when they see, okay, you just got 10, 15, 20,000 2 months ago, why are you coming to us for credit now? Like, that's one of the things that they're looking at. And they're also looking at is, okay, you're getting all this credit in a short amount of time, what's going on? They want to see that your accounts are a little bit seasoned, because the longer you have a relationship, it's the more stable that you appear, at least from the financial institution's point of view. So you have to play within those parameters, let your accounts age. I've seen this even personally with clients where they had a good credit profile, but they may have opened up two recent accounts, and that's one of the reasons why they're getting rejected. So if you plan on going for funding, where you're going to be applying for lots of accounts, right? Ideally, what you're going to want to do is apply for all of those accounts within a short window, right? Another question that I get a lot is, are you concerned about inquiries, right? Inquiries do matter, right? But it's going to be more so the new accounts, right? So if you're applying for, Equifax, right? The institution pulls Equifax, that's not going to affect an application that's pulling from TransUnion or Experian. When it's going to affect those is when that new account posts, because it's going to report to all three. So what you're going to want to do, as well, is open those new accounts in a very short window before some of them start to post, because once you have 3, 4, 5 new accounts, getting additional accounts after that is going to be very difficult, especially when those accounts are very young. So for those of you seeking funding, make sure you're gardening, right? If you have any new accounts, you're kind of at a standstill until those accounts, or at least 4 months, ideally 6 months, but four at the minimum, because anything three or less is considered a new account. So that's just one very, very important thing that I wanted to highlight. So we went over, doing your own due diligence, positioning yourself, gardening, and then lastly, the last point I wanted to make before I wrap up this video is what I've seen recently with trade lines, right? So there's been a huge demand in trade lines, authorized user trade lines. Institutions are getting a lot more rigid in terms of their underwriting. So one of the ways of boosting your credit score, credit profile, is by adding authorized users. Those trade lines that you inherit the positive account, positive or negative account information. So you also got to be aware of that. But those combination of factors, right? Adding a trade line can reduce your overall utilization, add more positive payments. It could also add to the average age of your accounts, depending on the age of the trade line relative to what your the age of your profile is. So those combination of factors can help raise your credit score. But here's one of the things you want to be mindful of, right? Especially with the climate now, right? So, you know, a year ago and before, you could just add trade lines and then go get funding and get comparable, limits. But what's happening now is institutions are rescoring, when you go for underwriting, or rescoring your credit based only on your primary accounts, right? And primary accounts hold more weight than authorized users, because authorized users are not really your accounts. It doesn't really portray your credit worthiness, right? You're just piggybacking. Um, and so the point I really want to make is that yes, authorized users are good, right? But you don't want to have only authorized users, holding up your credit profile. So if it, like, most of the positive data on your profile is only AUs, it's not really going to help you in the long run, right? If you have derogatory items, adding more and more AUs is not going to, fix the problem at hand. So I just wanted to, lay that out there. There's nothing wrong with AUs, but what I see is like excessive AUs, right? Adding four, five, six, seven authorized users is not really going to be, it's going to have diminishing marginal returns. And at the end of the day, you want to focus on building up your own primary accounts. The real way to leverage authorized users is for it to pull your score up to the point where you can start building up your own primaries. But don't just stop at adding AUs, right? Get your own primary AUs, and that doesn't mean jumping, thinking that you can jump straight to high limits after adding AUs. You're still, if you don't have any other primary data, you're still going to have to start building from the bottom, right? That doesn't, just because you add AUs doesn't mean you can skip steps. And that's one of the misconceptions that a lot of people get, where they add all these AUs and think, okay, I added 4 or 5 AUs, now I can go get $20,000 and $30,000 limits. That's just not happening now, right? You used to be able to do that. It's not working the same. And I just wanted to let you guys know, because I benefit from trade lines, right? I offer trade lines, but I'm also going to let you know what's in your best interest. And when I see this, I just want to inform people that, authorized users are not shortcuts. You're still going to have to go through the steps. It's not a fast track to funding, especially now with, FICO 10. That's essentially going to make authorized users obsolete, right? It's not going to have the same impact that it once did. And even, like I said, and the last thing I wanted to also say is sort of generalizations with credit scores, right? Sometimes you might think that your credit score and approvals is just a linear relationship, right? As your credit score goes up, so does your probability of getting approved, and that's not necessarily true, right? It's more about your credit profile, because I've seen this where I've had clients with lower credit scores, maybe a 680, 690, with a lot of primary accounts, good history, and someone with a 780, but they had two, three authorized users and no primary accounts, and that person with the 780 is not getting the approvals because they don't have the primary data or they have a thin profile, right? You got to make sure you have a thick profile. So don't get too wrapped up in the credit score. And another thing too, where I get generalizations in terms of, okay, this person got approved with this credit score, right? That's incomplete information, right? Because when someone's like, okay, I got a 750 credit score, what are my chances? Well, for one, what credit score are you talking about? Are you talking about Vantage score? Are you talking about FICO score? If you're talking about FICO score, then which version, right? Are you talking about your FICO 10, your 9, your 8, 5, 4, 3, 2? Are you talking about your bank card scores, your mortgage scores, your auto scores? And which bureau is it pulling in from, right? Because you have about 30 different FICO scores. So, and then the different Vantage 3.0, 4.0, whatever. So you can't, and even at that, you can't generalize on the score, right? What other type of information do you have on your credit report? Do you have paid off accounts? What's your revolving credit balance? What's your installment balance look like? Do you have too many accounts with balances? Do you have too many recent accounts? Too many recent inquiries? All of those things are considered. So you can't really just speculate based only on your numeric score. So that's the final point that I wanted to make. But I hope all of this information can help you going forward. Just to recap, right? You want to do your own due diligence, right? Don't see a video and kind of speculate that you'll get the same results if you're not aware of the positioning that took place. And then in terms of positioning, going forward, relationship banking is going to be a lot more productive for you. Just walking in based on a good credit score profile is not going to work the same way that it have with recent, maximum exposure limits, and just not allowing these institutions to really get to know you first. So that's one thing. We talked about, trade lines. They're good, but don't over rely on them. And then generalizations when it comes to, your credit, your numeric credit score. Definitely consider your profile over your score. So I hope this was helpful. I know this is somewhat of a long video, but I just wanted to highlight some things that you should be aware of just to get your game on track, in 2020 and beyond, and be better prepared and in a better position to be able to build your credit, get funding, and do the things that you need to do. So with that being said, I'll talk to you guys later and take it easy. Peace.